So we've had another nutty week in the markets. Here's what you need to be able to do right now. Number one, stay calm. You got to just be able to stay calm, stay rational as you're thinking about your money, you're thinking about your investment strategy. These kinds of markets that go up and down, they whip you out of control if you're not really focused on what's happening and you're just seeing the numbers bouncing around. It can really get you off centered, and it can make you do a bunch of decisions that maybe you later regret. Okay, so stay calm and stay rational, stay focused on what you actually own. We'll get to that in 1 second. What's actually happening here? So we saw the markets going down the first few days of the week, and then we got this big historic rally after President Trump put a 90-day pause on some of the tariffs that he had put in place last week. It's not all the tariffs, it's just some of the tariffs. He took off, he basically put a 10% across the board tariff for all countries, but he ratcheted up the things on China to north of 100%. So we still have a trade war going. We still have tariffs in place that are greater than what we had in place prior to the beginning of April. So you have to realize that even though we have that historic rally on Wednesday, half of that has been taken back on Thursday here as we're digesting more of this trade war and realizing that, okay, there's still uncertainty around businesses, there's still uncertainty around consumers. Companies who have to face these tariffs, they have to say, okay, do I pass this money along to the consumer or do I have to eat some of it? If they have to eat some of it, that's going to cut into their bottom line. It's going to make their earnings a little bit lower, and that's going to make their stock prices generally lower as well. Meantime, consumers, if they're having to eat some of that, that's going to affect their purchasing decisions. They may either buy less, they may buy certain types of items, avoid some of the more discretionary items. Simply makes trade less efficient. And when you have markets that were more priced for perfection, any kind of inefficiencies really cause some havoc in the markets. And that's kind of what you're seeing this week, and particularly here on Thursday. So how should you think about your money? The number one thing you need to think about is what's actually in your portfolio. Having so many conversations with people about this, what do you actually own? Sometimes it's really hard for you to figure it out because it's just a bunch of letters and you're like, is this a stock? Is this a bond? Is this a mutual fund? Is this an exchange traded fund? What exactly do I own? And it's not enough to just know you own stocks or bonds. It depends on what kinds of stocks they are. Are they growth stocks versus companies that have more stable earnings? Are they US-based companies versus international companies? Are they large companies versus small companies? All of these different types of companies and their stocks get hit differently. The other thing you want to know with bonds is, do you own short-term bonds, ones that aren't as sensitive to changes in interest rates, or do you own more long-term bonds? Do you own government bonds? Do you own corporate bonds? All of these things are going to move differently too. So it's critical you understand what you own in your portfolio. That's true all the time, but particularly in markets like today where they're extremely volatile. And if you're trying to plan out your money, you want to know how much of that money is in stable assets, things that aren't going to fluctuate that much, and how much of my money is invested in more volatile assets. If you can have enough money in stable assets, whether that's a year, 2 years, 3 years, whatever makes sense for you, your situation, your comfort level, your goals, if you have that money set aside in more stable assets, then it can help you stick with your long-term investing strategy. But in order to think long, you really have to think short and make sure that you've got the foundation buttoned up, that you've got enough money to take care of the next few years, goals, lifestyle, your own comfort level. If you have questions about any of this stuff, reach out.